In my humble opinion, Verizon Communications is one of the top dividend stocks with a current dividend yield of about 6.63%. Tigress Financial recently maintained a buy rating on Verizon Communications, but lowered the price target to $64 per share from $68 per share. That is still well above the current price per share. And this is in part because cable and telecommunication companies have lagged behind the broader market as their two worlds are colliding. Companies such as Verizon have been impacted as the wireless operator is spending heavily to attract internet subscribers with fixed wired access, while the cable companies are trying to build wireless businesses. So, doctor, let's do another deep clean on the charts. And now we're taking a look at the 20-year monthly chart on Verizon Communications, and the symbol is VZ, as you see in the upper left. For disclosure purposes, I do not own any shares of Verizon at this time. Now, we definitely have come down way down here. It looks like it bounced off somewhere near that 35 and on up to that 39.25 as the current close as of Tuesday, after having this long-term rollover and then fairly steep sell-off. So going back here in the 2008 to 2010 time frame, you can see we also had a steep downturn at that point, and then it took another, say, year and a half before it got to this point and then started to climb out. We could take that long before we start to rumble on the way up, but I do think that we're near the bottom. Moving on down here into the volume. Volume is decent, but as you can see here, it's been climbing as the stock price declined. That's not necessarily good, but I don't think it's a significant negative. Looking here at the MAC, definitely you see that from, say, early 2020, we definitely have been sliding all the way down here, but I think we're nearing a bottoming and basing. This separation, though, is still relatively wide between the fast line there in the black and the slow line here in the red. That means there's still time that this stock needs to heal. Going once again back to 2008 through 2010, it took a year and a half before it bottom based and finally hit that level there and then took off. So this can take time, but you are going to be collecting a fairly healthy dividend. Here in the histogram, we're definitely pretty negative at that point there, even more negative than back in 2008 2009, but I think we are starting to repair. At least we have a couple of months of improvement. And again, we're not too far from that zero line. Here in the price rate of change, we've been sawtoothing our way down here. Let's see if we can bottom and base as we did back in 2008 through 2010. Once again, we didn't get moving until, say, a year and a half. So it could take time. Just be patient and prudent. Relative strength index, very weak, 28.89. Sawtoothing down here, but we've done quite a bit. I think we're probably halfway to 3/4 of the way through, at least in my estimation. No guarantees. Stochastics look also like they've been bottoming and basing here. Still a little bit more healing to do, but I think it's looking relatively decent, and the same thing there in the Williams. One last look at the price chart, and as usual, conduct your due diligence of the fundamentals, because the risk is all yours. There's no guarantee. ChewDog out.